Good morning, everybody. This is Miss Carol. Of course, you know me. This is Mod 110, Week 3, Day 4. And today I'm going to go over an exercise with you guys. So please watch this. Make sure you have your Kindle with you. Make sure you have a T account template. Make sure you have a journal, and then make sure you have about 3 pages of the general ledger. We're going to need at least 3 pages. Okay? And then, of course, your Kindle. Your Kindle should be open up to Problem Set B. On my book, it's 113, but for your book, it should be page 111. So again, Problem Set B, 4.1b, page 111. We're going to go over this exercise today together. Okay?
Yep.
Okay. So Problem Set B, and again, it's very possible that your transactions are different. Remember last time my transactions were a little bit different than yours. If they are different, then just go along with me. I will send you a picture of these transactions that I'm doing here so that we could have the same ones. Okay? So whether doesn't really matter. Anyway. Okay. So what we're going to do here is we're going to start a three-step process. Now remember I was saying that the T accounts are just really kind of a worksheet. It's not one of the official documents, but it's a way for us to make sure that we're following the bookkeeping or the accounting equation. Assets equals liabilities plus owner's equity. Is to make sure that we're balancing this way. Okay, because we don't get that information on the journal or the ledgers. So we use the T accounts to make sure that we're balancing on our bookkeeping equation. The journal is where we just start listing all the transactions, and we put most of our information here on the journal. And then after we journal, we post, and that's what's called posting. You take from the journal and you post it to the individual ledger accounts. And that's what we're going to do today. Okay. So, the first thing I want you to do is to write down these accounts. And if you need to stop the video and pause it and write these. So, assets, under assets, and I want you to put them in this order. Assets, there's cash, accounts receivable, and equipment. Cash is 101, accounts receivable 111, and equipment 141. And then liabilities, we have accounts payable 202. And then under owner's equity, we have 301 Charles Brown Capital and 302 Charles Brown Drawing. And then revenue, 401 fees income. And then expenses. They have a lot of expenses here. Cleaning supply expenses, 501. Equipment repair expenses, 502. Office supply expenses, 503. Rent expense, 511. Salaries expense, 514. Telephone expense, 521. And then utilities expense, 524. So hold it there for a second. Go ahead, pause the video, and write those down. Okay, so I'm assuming you did that and you have those written down, or they may already be in your textbook. If they're already in your textbook, then we're good to go. All right, so the first transaction is Charles Brown invested $50,000 in cash to start the business. Okay? So Charles Brown took his own money and invested it into his business. let's see, his business is called Brown Building Cleaning Service. Okay? So, what two accounts are affected? You remember? Well, first of all, we always do the debit first, and then we do the credit, right? So if we're dealing with the investment, we're dealing with two accounts. One is cash, and one is, yes, owner's equity. It is the capital. Where is it? There it is. Charles Brown Capital. So we're going to create a T account over here. Remember, make your cash one the biggest, because that's the one that's going to be the most active. So cash. And let's write the account number, 101. Okay, so you should look like that. And then over here, under owner's equity, we have our capital. So it's called over here Charles Brown. Right here. Charles Brown Capital. That's a long name, I know, but it is what it is. Okay. So remember, what side is the debit, what side is the credit? Now here it's written for you, but not every sheet is going to have it written for you. Debit is the left, credit is the right. So the first thing we need to do is we need to debit our account. What account gets debited? If you said cash, you are correct, because we are increasing our cash. So since we're increasing our cash, we're going to debit it. So we're going to go ahead and put $50,000 under cash. And then go over here to owner's equity, Charles Brown Capital. We're going to debit or credit. If you say credit, you said it correct. $50,000 under credit. Okay? So the first transaction is done on our T accounts. So now what we're going to do is we're going to go from T account to journal. T account to journal. And then after we're done with the journal, then we'll go to our general ledger. Okay? So first thing I want to do is on top of here, I'm going to write the Brown Building Cleaning Service. And this is journal page 1. Okay? Then I'm going to put the year 2020 right here. And then I'm going to put the month. Or here it's actually saying September. So we're going to act as if it's September of 2020. So I'm going to write September. I'm going to abbreviate SEPT, or you could write 09. And then I'm going to put 1. So far it should look like that. Focus more on this. Okay, so the very first thing I'm going to put is I'm going to do the debit. So look over here, we debited cash. So I'm going to write here, cash. Okay? I'm going to leave this box blank, and there's a reason for that. I'm going to come back to it. So we're going to debit or credit. If you said debit, you said it correct. We're going to put $50,000 into the debit amount. So 50, 1, 2, 3. 50,000, and then again, don't forget your cents, because again, we might be dealing with pennies too. 50,000 under debit. Okay. Then what we're going to do, the next part of the transaction. Oops, I forgot to put the account number here. Sorry. Capital 301. So I'll just write it there. All right. Notice I'm writing in pen. Remember I said in class we'd use pencil, but if we're actually doing this, let's do it in pen. And I'm also doing it in pen so you could see it better, because pencil you wouldn't show up very well. So over here I'm going to indent a little bit, and I'm going to write the name of the account, which is Charles Brown, comma, capital. All right. And then, remember, do we debit or credit? Well, we already debited the cash, right? So this means we need to credit the Charles Brown capital. So remember, in order to increase capital, which is an owner's equity, we credit. And increase assets, we debit. So we debited the cash and we credited the capital. So basically we increased both of them. All right, then down here below it, I'm going to write initial investment. Remember, most of the information that we're going to record on the journal. Okay, so this is the journal. All right, so we're done with that one. So let's go to the next transaction over here. September 5th, perform services for $6,000 in cash. Okay, so we're going to go to our T accounts, and are we going to increase or decrease our cash? Well, we're going to increase because we performed services and they paid us $6,000. So in order to increase our cash, we debit. So we're going to put debit $6,000 under cash. Okay? And then what other account is affected? Well, this is money that we made. So when we make money, it's under revenue, which is, again, under owner's equity. So we're going to write here, it's fees, income. Remember, revenue is the same word as income, same thing. And we're going to write the account number 401. Okay. Now, do we debit or credit the fees income? Well, we debited the cash, we increased it, we're increasing our income, so we are going to credit it. So $6,000 credited under fees income. All right. You guys staying with me now, right? Okay. Now we're going to our journal. We're going to skip a line. And then here, we're going to look at the date. The date was the 5th, so we're going to put 5 here. We don't have to write September because it's self-explanatory that this is the 5th of September. When we go into October, we will write the month October. So what happened? First account that was affected, cash. Okay. We debited the cash, so we're going to go over here to make sure we're on the correct line, 6,000. Okay. And then again, what other account was affected? Under owner's equity, our fees income. So here we're going to write fees, we're going to indent fees income. And then we're going to go over here, and since we debited the cash, we're going to credit the income. All right, so far your ledger should look like this. And let's see, performed. I'm just going to write underneath here, there's no check, it doesn't mention a check, so I'm just going to write perform services. Just to give some more information just in case. Okay, so again, I'm leaving the PR. I'm leaving this one blank for now, and we'll come back to it All right, so that's it for the second one. So let's go to the third transaction. The third one was issued a check 11000 or 1000 for $2,500 to pay the September rent. Okay, so what's happening here? We had to write a check, which means what's going to happen to our cash? Are we going to increase or decrease our cash? Well, if you said decrease, you are correct. So we are decreasing our cash. So that's a credit. So we'll go ahead and put credit here to 2,500. Decreasing our cash. Well, what is going to be debited? Well, this is part of our expenses. So over here we're going to write under expenses, rent expenses. Write the account number 511. Okay. All right, so we credited the cash, so now we're going to debit the rent expenses. Okay? So, over here onto the journal, the date is the 6th. I'm going to skip a line, so I'm going to go to the 6th, and I'm going to write the first account that's debited is rent expenses. Remember, we always write the debit one first. That's the one that gets written first. Rent expenses. Okay? And then that's for $2,500. I'm going to put the amount, $2,500, right there. Okay. So below that, the other account that was affected was cash. We credited that, so we're going to write down here, cash. We're going to go over here to credit, $2,500. Okay? And then it also does mention that there was a check. So down below cash, we're going to write check. You can abbreviate 1000. And then right here we could say for September rent. Now some of you might be asking, why isn't this amount going into accounts payable? Well, to answer that, the reason is because we are paying for September's rent. This is not money we owe. We're paying it for September. So we actually paid it. Here it is, September, we're paying it, and now we're using the September rent. If we owe for maybe back rent, then we would put it in accounts payable. But it doesn't need to go in accounts payable. It is an expense. So cash goes out by, cash goes out by crediting, and it's an expense that is debited to increase our expenses. Okay, so that one's done. So now let's go to the next one. Perform services for $6,300 on credit. Okay, so the date is the 7th. Get back over here now. The 7th. Okay. Now, this was done on credit, meaning we perform services and they're going to pay for it later. So what account, oops, sorry, I was supposed to go to the T accounts. So you're supposed to remind me, what account gets affected? What two accounts get affected? Does our cash get affected? No, because they're not paying right now. What is it called when they're going to pay later? It's called, if you said accounts receivable, you said it correct. So accounts receivable, I'm going to abbreviate. You could just abbreviate AR. That's fine. And the account number is 111. All right. Are we debiting or crediting our accounts receivable? If you said debit, you are correct, because we're going to increase our accounts receivable. So, how much is it that we did on credit? $6,300. So over here on the debit side, $6,300. Okay? All right. What other account gets affected? Now, if you said income, then you are correct. Even though we don't have the money yet, it goes into accounts receivable, it's still an asset. It is part of our revenue. So, what am I going to do? I'm going to increase our income by $6,300 by crediting it. $6,300. Okay. Go to the journal. The date is the 7th. Okay, what account gets debited? Accounts receivable, right? I'm going to abbreviate. All right, accounts receivable. And then I'm going to put here $6,300 gets debited. Okay? And then what account gets credited? Fees income. $6,300. All right. Going good. Going good. It doesn't say anything else. It doesn't give us any more information like what the account number is. If there was an account number, I would put it here. But it doesn't give us that information, so we'll just leave it as is. All right. The next line is for September 9th. They paid paid $640 for monthly telephone bill, issued check 1001. So, what two accounts get affected? We're issuing a check. So remember, a check is the same as cash. So are we decreasing or increasing our cash? We are decreasing our cash.